Back in 2004 and 5, Michael Burry realized that the numbers in the mortgage market didn't add up. The subprime market was quite overvalued since these mortgages were given to people with a high risk of default. Logically, that means that sooner or later the real estate market is going to crash, and concluded that the housing bubble will ultimately lead to the collapse of the US economy. Burry was a manager at Scion Capital, a hedge fund he founded a few years earlier. So in 2007, he shorted the market and put a bet against the subprime deals. And guess what? The market collapsed and he made over $100 million. To most people, crises are bad. You lose your job, you might lose your clients, and overall you wish that things returned back as they were before. But to the rich and people who know how the system works, a crisis is like a blessing that happens once in a decade that provides you with the opportunity to make more money in a single year than you would in a decade. Here in this video, we are going to take a look at 3 ways that the rich are making a fortune during crises. But before we start, if you want to support this channel and help us make more videos and want your name at the end of the next video, make sure to check out our Patreon page. In fact, I'll be posting weekly updates about the market, or sometimes I'll pick up a company and analyze it and figure out if it's a good investment or not. So if you're interested in all of that, then make sure to check out our Patreon page. And now, let's get into it. Most people know 1 or 2 ways to make money in the stock market, and it's by buying low and selling high. There is nothing wrong with that, but if you dig a little deeper into the stock market, you will find out that there are many other ways to make a fortune, especially during crises. One of the popular ways is shorting, exactly what Michael Burry did. Let's say, for the sake of example, Apple's stock price is $100 and you expect it to drop to $60 next month for one reason or another. Here is how you make money. You borrow that Apple stock from your broker and sell it for $100. Congrats, you made $100. After 1 month, let's say your prediction turns out to be right and the stock price falls to $60. Using that $100, you purchase an Apple stock for $60 and give it back to your broker from whom you borrowed it a month earlier. Suddenly, you're left with $40 of pure profit without using a single penny out of your pocket. You made a profit from the crash of the stock. It sounds good on paper, but it's extremely risky because if you make the wrong bets and the price rises instead, theoretically, your losses can be unlimited. Nevertheless, it's an amazing tool to make a fortune during crises. Let's say back in February, you were reading the news and realized that soon enough that this virus is going to reach the United States and the country will have to go on lockdown. Since we were already on the brink of a financial crisis, and if that's going to happen, the stock market is going to crash definitely. So you decided to short the market at its peak. A month later, in March, the market crashes and you make a fortune. Did anyone do that? Yes. Hedge fund manager Bill Ackman from the turmoil on the Wall Street just recently did that. Ackman disclosed in a shareholder letter to investors in his Pershing Square Capital Management Fund that he made $2.6 billion as stocks fell. Overall, according to Bloomberg, short sellers made over $50 billion in this crash. When the dot-com bubble crashed in 2001 and S&P 500 fell by 12%, Michael Burry's hedge fund Scion was up 55%. Burry was able to achieve these returns by shorting overvalued tech stocks at the peak of the internet bubble. The next year, the S&P 500 fell again by 22%, and yet Scion was up 16%. The next year, in 2003, the stock market finally turned around and rose 29%. But Mike Burry beat it again. His investments rose by 50%. The good news is that the market most probably will crash again this year, especially as we get closer to the second wave of this pandemic. By the way, I'm going to put a course on the stock market on our Patreon page. So if you want to take advantage out of the next crash, you might want to check it out to have a deeper understanding of the stock market. Besides controlling the Fed, the job of the Federal Reserve is to prevent the economy from sliding into a recession. And one way it does that is by lowering or increasing interest rates. During a crisis or a recession, the Fed or any central bank reduces interest rates to the bare minimum, sometimes to 0% or even to negative percentage, where banks would pay you to borrow money. Doesn't that sound amazing? It might sound insane to some of you, but during economic turmoil, people are afraid to spend or invest and hold on to their money. Negative interest rates are a way to encourage people to spend to get the economy running again. Here is a fantastic way to double or triple your wealth. Take these free loans and buy up your competitors while they are bleeding cash and dominate the market. When the pandemic is over, you will have a much larger market share and would quickly pay back that loan, especially since that loan was for free. Some people go as far as taking these free loans to invest heavily in the stock market when prices are below the ground, and once they rise, sell your portfolio and pay back your debt. It might sound immoral, but the world of business is all about competition. You either keep fighting to stand your ground or get knocked out by your competitor or a new startup that found a more innovative way to serve your customers. But the problem with that is that most poor people aren't going to take advantage out of these negative interest rates since they don't understand how the economic machine works. If you just lost your job because of this pandemic, the last thing you would do is to take another loan that you aren't sure you can pay back. In 2008, many companies went out of business and millions lost their jobs. And since it was a mortgage crisis, many lost their homes as well, while others found their way to profit from the crisis. The CEOs of the companies that went bankrupt left the companies with bonuses that reached hundreds of millions of dollars. People at the bottom realized the importance of investing and having other sources of income other than their job. But in this complicated world of the stock market, it seems like an average person will most likely lose money than make. On top of that, brokers weren't cheap. To make a deal and buy some stocks, you had to pay your broker $5, $10, or $15. Of course, if you're making tens of thousands of dollars, that's not a big deal. It's peanuts for you. But for amateurs who are just starting with as little as a few $100s, $10 per trade is a lot. And that's the problem Vladimir Tanev and Baiju Bhatt realized. Inspired by the events of the 2008, they came up with Robinhood. In 2013, they founded the company and announced that Robinhood is going to be a commission-free trading platform where anyone can pull out a smartphone and start investing as little as a few dollars. It was a revolution. It inspired a new generation of investors, encouraged people to put their money in the stock market who never thought they would do that. The Robinhood began to grow tremendously. Year after year, the number of users hit a new record. In its last round of raising funds, it was valued at $5.6 billion. Today, it's probably much higher. It turned its founders into billionaires within a few years. Crises create new challenges and push us to find new, unique, innovative ideas to solve them. These solutions can be turned out into billion-dollar companies, and rich people understand that. That's why they are focused on two things: either solve these problems or find someone else who is already solving these problems and invest in them, because your tiny investment during a crisis will turn into a fortune after the crisis. This pandemic forced companies to come up with new ways to create vaccines. We have created a testable vaccine in just 42 days, which has never happened in history. Just think about what does that mean for the pharmaceutical industry. Other businesses are finding different ways to enable their employees to work from home. Just think about what does that mean for millions of people all around the world. Others are expanding their delivery infrastructure, so even after the pandemic, food and goods delivery will be faster and better. We will have to wait a couple of years to realize the true innovations of this pandemic as we did in the previous crisis. I hope you guys have enjoyed this video, and if you did, make sure to give it a thumbs up, and if you're new around here, then subscribe for more similar videos. And oh yeah, by the way, don't forget to check out our Patreon page. Thanks for watching, and until next time.